Thinking of earning through the stock market. The stock market is where investors trade shares in firms, which seems straightforward enough. Many individuals are stumped when it comes to how these transactions are made, who can make them, which businesses may sell shares, and, most importantly, what you should do with all of these information. In this video, we're going to take a look at the stock market and why it matters.
Pennywise, the channel focuses on exploring wealth and increasing savings through life-changing practices about personal finance, money earning and management tips, avoiding hoaxes, and so much more. Our goal is to equip you with a Pennywise mindset through your journey to fund and help you experience the life you desire. So please join us on this exciting adventure by clicking the subscribe button below.
A lot of people are talking about it lately because the Dow Jones Industrial Average just hit a new all-time high. Aside from that, news and books tell stories of people getting awfully rich through the stock market. But what exactly is it? And more importantly, why does it matter? If you're like most people, you understand what the stock market is but have no clue how it works. Even if investing isn't your thing, it's still important to understand the stock market. That's because the stock market can affect millions of everyday things we take for granted, like the products available to us, which job markets are growing, and which houses we can afford to call home. The stock market doesn't just affect rich people or those who trade stocks as a profession. To have a better grasp of how the stock market works, let us imagine a simple lemonade stand. Despite being successful, Max wanted to expand her lemonade stand. However, when she tried to get a loan from the bank, they said that her business was too risky and that investors weren't interested. But Max had another option: going public with an initial public offering or IPO. This would allow anyone who wanted to invest in her business the chance to do so by buying shares for a certain amount of money. Max sells a large number of shares and she grows her lemonade empire. Max may invest that cash in opening new lemonade stands, giving her more profit. Max can reinvest some of those profits to develop new products. She can also share some of the monetary benefits with her investors in the form of dividends. She didn't have to do it, but it did help to pique people's interest in her business and make them more likely to buy her stocks, such as Lee. He was unwell on IPO day, but he believes that the lemonade stand idea will be a success. So he offers to buy shares from one of the original investors for twice what she paid for them. That's the stock market, which is made up of individuals buying and selling tiny portions of enterprises based on how much they believe those assets will be worth in the future. The market is an indicator of the health of the economy. This is happening all over the world, every second of every day. The notion of sharing ownership dates back to the East India Company, which was founded in 1604 as a means for investors to share the risk of transporting goods across open, perilous seas. While not all ships made it to their goal, the majority did, and no single investor had to bear the financial loss of a ship on his own. These days, the stock market is a way for many individuals to contribute to and profit from businesses while lowering their own risks. The majority of trading occurs on three major exchanges in the United States: the New York Stock Exchange, or NYSE, the National Association of Securities Dealers Automated Quotations, or NASDAQ, and the American Stock Exchange or AMEX. The stock market would not function without investors, brokers who handle stocks, or stock exchanges. Now that we understand what and how the stock market works, have you ever wondered what stocks are? Stocks are like owning a few trees in the forest. You can buy more or sell your trees to others. If apple trees become popular or start growing better than other types of trees, their prices may rise due to high demand. If the trees are healthy, they will grow slowly over time, making them more valuable. A few times each year, they produce fruit that has value. Stocks are more than a slice of a company. There's plenty to understand about stocks. Though they are often described as small ownership in a company, stocks don't actually translate to much power. Sometimes owning stocks allow you to vote on company issues, like electing a new board member. There are two types of stock, common and preferred. Common stock is what we typically think of when we talk about stocks on a stock exchange. It allows you to participate in the company. Common stock investors receive dividends from the firm on a regular basis. However, if the firm goes bankrupt, they are the last to be reimbursed. Though preferred stockholders don't get to vote, they do receive a set of dividend, meaning their payments are steadier than with common stock. This makes them slightly less volatile investments, though their potential reward is smaller. What then is a stock exchange? The stock exchange is a marketplace where you can buy and sell stocks. People post prices on a bulletin board, and when two match, the sale is made. In the past, these would have always been actual occasions where people met and made transactions. However, today, a large portion of the transactions conducted on stock exchanges are done electronically. Companies that list their stocks in over-the-counter markets, referred to as OTC or the pink sheets, are not required to have reporting listings and don't need to register with the Securities and Exchange Commission or SEC. Stocks on pink exchanges are frequently either foreign stocks or ones that have plunged so low they've been delisted from an exchange. Many legitimate stocks trade on pink sheets, yet one should be more vigilant when contemplating an OTC stock as they can be more opaque and erratic. How are stocks actually bought and sold? Exchanges function similarly to auction houses. A broker or an internet platform acts as a go-between for the seller and the buyer, with each side submitting an asking price and a selling price. If the asking price and selling price are identical, the orders will be fulfilled. This may occur swiftly in large markets, but it can take quite a long time or not happen at all in minor ones. But how do they determine the prices in the market? Many individuals believe that the price of a stock fluctuates erratically, making investments appear to be a gamble. While no one can predict the future, skilled investors understand how to make an educated guess about a corporation's value. These are the following factors usually taken into consideration: revenue growth, earnings per share, price to earnings ratio, how often dividends are distributed, and management credibility. The price of a stock is not set by any one person or organization. Rather, it is based on how investors feel about the stock. That is, the number of people buying versus selling at any given time. This give and take creates a fair market price that you see listed online. When you purchase a stock, You are betting that other investors will want to buy it from you at a higher price in the future. If they don't, then the stock's value falls and you lose money. This is why stocks are often called volatile. They can go up or down quickly and sometimes by a large amount. Now that you know a little more about stocks, you might be wondering why anyone would want to invest in them. The stock market has historically been one of the best places to grow your money over time. Over the last century, it has averaged around 10% return on investment annually. That means if you invested $1,000 in the stock market 100 years ago, it would be worth over $40 million today. Of course, there are risks involved with investing in stocks. The stock market can go down as well as up, and you could lose money if you invest without doing your research first. If you want to learn more about finances, consider subscribing by clicking the big red button below and ringing the notification bell to get notified when we upload new videos. Feel free to like and comment your thoughts so we'll know your feedback. Thanks for tuning in and see you again in our next video.